All right, guys. So the day after we got the 50 basis point rate cut, well, the entire stock market is exploding. We have the S&P 500 up 1.7%, and by the way, we hit an all-time high today on the S&P. The Dow's up around 1.2%, and oh wait, by the way, an all-time high for the Dow was hit, as well as the Nasdaq's up almost 2.7%, not quite yet at all-time highs, but it is breaking out, and the Russell's up almost 2%. So guys, we're going to break down the indexes in this video and overall some stocks that are moving on my watch list. So hit the like button, make sure to subscribe, and of course, do not forget to get up to 15 free stocks from Moomoo with at least a $100 deposit, and your uninvested cash for now will earn up to 8.1% APY, which I think that deal is running out in a couple of days here. So guys, use that link down below or go to stocksurfs.com/Moomoo. And with that being said, cheers. Let's dive right into the video. So I'm sure you guys saw my video yesterday breaking down the Federal Reserve, the 50 basis point rate cut, and we saw some choppiness after we got the decision. Well, I guess initially the markets ended up going up like crazy. Then we saw the choppiness afterwards. If I pull up this 5-day, 5-minute chart, you guys can see here. If I zoom in, boom, we got the pop on SPY. Then we got a big sell-off afterwards, pretty much giving back all the gains. And I told you guys in that video, we might see some volatility in the coming days, but ultimately, I think markets are going to go up. And well, we didn't really get volatility in the coming days. We just went straight up today, which is the day after we made that video, or I made that video, and we got that 50 basis point cut. So I'm not surprised at all that the markets are bouncing right now. I mean, like we said, and like you guys probably know, risk on assets, hence the stock market going up, they go up as rates come down. Pretty basic economics there, economics 101. That's how things work, right? We get rate cuts, stocks, tend to go up over time because of that reason, especially in the short term, right? When we get that news, and we tend to get real estate prices to go up, right? Now we just saw the mortgage rate has hit, I think, a 2-year low, maybe an over 2-year low for a 30-year. So demand to buy homes, that's starting to go back up now. It has been, I believe, for some time here, for a couple of months. But yeah, that's kind of what we're noticing here. We got the 50 basis point cut. The markets were a bit choppy during the press conference, but now as we're digesting that, boom, we're getting the nice spike overall across the board, and the VIX is down almost 9% at the time that I'm making this video, guys. And yeah, all-time highs were hit on SPY, and we're breaking out of this kind of sideways action that we've been in for a couple of months. I mean, last time we hit an all-time high on SPY, it looks like it was in the middle of July. And by the way, we ripped from the middle of April all the way to the middle of July. So we cooled off a bit, chopped around a bit, and we did have an ascending triangle. You guys probably see this right here. And now again, we're breaking out. All-time high was hit at 572 on SPY. And who knows, man, 600 points or 6,000 on the S&P, 600 on SPY. That could be coming sooner than you think. And for me, guys, I'm not one of these people that is like, oh, it's the election year. Oh, my God. The Fed's doing this, doing that. I'm not going to invest. I'm going to wait it out. That's not what I do. I know some other YouTubers are like, oh, get out. If the Fed does this, sell. Make sure to do that. Do this, right? Get out of your stocks. I'm not one of those guys. I believe in being invested throughout all the different time periods. Election year, Fed's cutting rates, Fed's raising rates, whatever it may be. I believe you should be invested, especially if you're a long-term investor and you're younger, especially if you're younger, guys, in your 20s, 30s, 40s, right? Even 50s, man. Depends on when you plan to retire, right? But yeah, I'm not one of these guys that's trying to get in and out and try and sell at the opportune time or whatever it may be. And I do believe in also having some cash, of course, obviously, an emergency fund, some extra cash in your portfolio. Cash is a position after all, but I think people are making a mistake, trying to time it, trying to get in and out before the election, whatever it may be. It's better to be mostly in the market, especially if you're in something like the S&P 500, right? With individual stocks, it might be a little bit different. But if you own blue chip stocks, I still think it's better to be in the stocks, right? Either way, whatever. That's a whole nother topic for another video. But yeah, here we are. S&P's breaking out. All-time highs are here. And Triple Q, which tracks the NASDAQ 100, this is also breaking out. Finally, we were in this downwards channel for a couple of months here. Let me draw it out and make it look a bit cleaner for you guys. There we go. By the way, smash that like button. Make sure to subscribe here on YouTube. I appreciate you all for tuning in. Triple Q is now breaking out of this channel, which we've been in for pretty much 2.5 months. And now we're starting to get a breakout of the moving averages as well, and a golden cross. And with the move that we're seeing today, we're ever so slightly peaking out of the highs from, it looks like here, end of August, roughly, right? We're starting to get out of those highs, which is really, really good news overall, right? So if we fully get out of here, guys, this too could soon be at all-time highs, which we're not too far away, guys. 20 points for Triple Q is not that much. I mean, today, for Pete's sake, guys, we're up 13 points, $13 on this ETF. So for it to go another $20 over the course of a couple of weeks, totally doable, man. Totally doable. So this is getting all-time highs, it looks like, slowly. The Russell is obviously looking really good. Now we're right back to where we were end of August, about a month ago. Also middle of July, where the Russell was struggling at about 2250. So this is a big spot for the small cap ETF, the small cap index. If this breaks 2250, 2300, well, all-time highs for this finally could be right around the corner. I mean, we're already right around the corner. All-time highs being 2450. We're at 2250 now, so we could get there in due time. And it looks like we're trying to get there, guys. And the Dow Jones, man, what a move on the Dow. We're just hitting all-time highs again today at 42,100. And clearly, this thing is breaking out. It's been breaking out, right? So the ones that are lagging a bit are the NASDAQ and the Russell, but I do think the NASDAQ especially is looking to catch up to hitting all-time highs like S&P, like the Dow. What do you guys think about that? Let me know down below in the comments. But yeah, we get rate cuts, asset prices go up, the rich get richer, guys. This is how it goes. And the risk here is maybe we do get more inflation with rate cuts coming down. The Fed's not thinking we will. I don't know. I mean, it's always a risk when you're cutting rates. It could spark inflation again, which that widens the wealth gap even more, right? Rates come down. Think about it. Asset prices go up. Poor people don't own assets, right? So asset prices go up. Rich get richer. As rates come down, inflation could spike, which means goods and services go up in price, and poor people have to pay more. Not saying poor people in a bad way. You guys know what I mean, right? They have to pay more for goods and services, so that means less money in their pocket, which, again, widens the wealth gap. It is what it is at this point, guys. It's been like this for a long, long time. But yeah, that's kind of what we're noticing right now across the board, and a bunch of stocks are blowing up here, guys. Tesla, which we called out in my video yesterday, is up 7%, breaking out to multi-week highs. The inverse head and shoulders is playing out. We do have a golden cross on Tesla. This is awesome. The way the chart is setting up, AMD is making a big move, finally starting to move here, up 6%. Not quite yet fully breaking out, but it's getting there at about $160 per share. That's the breakout spot on AMD. We're getting there, guys. We're getting there. From there, we could make a shot, in my opinion, back to 175, 180, 185, in that general range. So, yeah, man, things are looking pretty good right now. Of course, anything could happen. It's an election year. Nobody knows what's going to happen. But what I do know is if you're a long-term investor, you stay invested, you ride out the storm, you ride out all these uncertain, all these events that bring uncertainty. If you hold, man, you're going to be all right. You're going to be all right. So what do you guys think? Let me know your thoughts in the comments. Run the likes up. Make sure to subscribe. And don't forget to get up to 15 stocks for Moo with at least a $100 deposit, and your uninvested cash will earn up to 8.1% APY. The link's down below, or go to stocksurfest.com/moo and sign up to my mailing list. I'm sending you guys my top 3 stocks via email every Monday morning for free. Did I say it's free, guys? All you have to do is put your first name and your email, link down below. Do it. No spam, no BS, just straight up stocks and charts. I'll catch you guys in the email list. And with that being said, cheers. I'll see you later.